Hi there, this is Jeff Sokol, and I'm the professor for the 225L course during the fall quarter at San Jose State. And the purpose of this video is to give you an introduction to the course, to give you a little bit of background ahead of the first class, which is on September 22nd. It's a Tuesday evening. I'm sending this video out to all of the students that are either enrolled or on the wait list or on the Open University list. And so for those of you who are either on the wait list or the Open University list, I believe the communication to you has been that it's possible that if you attend the first night's class that depending upon the size of the room and seating and whatnot, we can add more people to the class. And if you have questions about that ahead of the 22nd, feel free to just email me or give me or Annette Nell a call. So one of the reasons I wanted to, well, every year I share this video with the class ahead of the course is just to give you an introduction to the technology that I use in teaching the class. So I use a digital blackboard approach, and you'll see that on the video I'm showing a PowerPoint slide deck, but it's such that I can also write on the slides as I'm doing here. And so you'll see that I'll use this Blackboard technology throughout the course. And what I'll try to do is capture the classes in this same video format and post these to YouTube so that you can access the class sessions after the class. Now, of course, this means that if you wanted to catch the class on the internet as opposed to by attending class, you can do so. And that, honestly, is perfectly fine by me. I think what you'll find is that attending the class is much more impactful. Because while I'll post a good chunk of the class on YouTube via this video format, much of the class is case studies, working in groups, and working through problems together. And that doesn't lend itself to capturing on video very effectively, and so usually I'll turn this off during those sessions. You can also see that if you wanted to search for YouTube for the last couple classes that I've taught and posted videos, you can find that as well. I didn't actually record last year's course, but you can find the 2012 and 2013 complete courses online. Okay, so a few frequently asked questions that I often get about the class. The course, of course, is the topic is income tax accounting, tax provisions, and it's not uncommon for people to have very little experience with income tax provisions before they take this course. What you'll find is that the class is typically a mix of experience levels, and so it's fine that you're anywhere in that spectrum. Although the one thing I would suggest, and I believe this is a stated prerequisite, is that you have at least taken a corporate class, a corporate taxation class, so that you're familiar with the differences between book and taxable income, and just generally corporate tax concepts. Absent that, this class will be very difficult. So attendance, what I find is that attendance is very high, and you, I think, will get the most out of class by attending and participating in the group sessions. Like I said before in the intro comments, we spend probably a third to as much as a half of every class doing problems and exercises and working those through. And it's through those exercises that you'll take some of the concepts we'll discuss and apply them. And I think that's where the learning will really kick in. I'll touch on the syllabus here in just a second, and if you want a copy of the syllabus, you can email me ahead of the class, or else we'll shoot it out on the 22nd or just before class starts. But I'm going to cover the class calendar here in just a moment. There is no textbook for the course. You'll find that in the syllabus there will be a link for you to access ASC 740, which is the FASB guidance that addresses income tax accounting. And that we will provide to you for free, so there'll be a username and password that we'll provide. Otherwise, throughout the course, my teacher's assistant, whose name is Kate Transon, she is going to be posting materials for you to download that will include slide decks, problems for in-class, problems for homework, and anything else that's relevant. So again, you don't need to purchase a textbook. And then lastly, you'll find at the end of this slide deck and video, there's going to be a homework assignment for the first class, so stay tuned for that so you don't miss it. Okay, so here's the class schedule for the fall quarter. You can see the first class is on September 22nd. That's Tuesday evening. Class is at 6 p.m. And there's a few things I wanted to point out in class. The first is, this is what people always ask, the first is the exam. So the exam is on November 3rd, which is class number 7. That is the midterm, and that exam will cover all of the course content through class 6. And then the final exam is actually a take-home problem. And usually you'll be working on that take-home problem right around in this time frame. So we'll pass out the take-home after class 8, and then you'll have, I believe, 2 weeks to work on it. We'll give you more details in the first class, but directionally, those are where the key exam dates are. The other thing I want to draw your attention to is one of the things that we do in class each night is part of the homework assignment will always be to read the public financial statements for a publicly traded company. So I'm talking about a Form 10K filing. And specifically, I'll have you read a company's tax footnote. So in the footnotes to the financials, there will always be a tax footnote, and that tax footnote will describe a lot about the company's income tax accounting. And so each week, I'll assign you a different public company to obtain the 10K for, do some reading, answer some questions, and just be inquisitive about what you can learn from a public company's 10K about their taxes. And it's a very, I think, effective way of getting you to think about, in practice, how to apply some of the knowledge that we're learning, some of the concepts that we're learning in class. And throughout the course, what I do is have the tax directors from some of the companies that I assign as homework reading, they come to the class and they'll speak with you. And they'll answer your questions about their income tax footnotes, and they'll tell you a little bit about their careers as well, because oftentimes I find that you all students want to meet these types of folks and understand how they got to where they got to, and to hear more about their jobs. So I mix it up every year in terms of guest speakers, and this year there's going to be 3, which is typical. And they'll come for the first half hour, 45 minutes of a class and talk about their tax footnotes. And the 3 you can see listed on the calendar here. The first one is NetApp, and that'll be on class 2. The second one is Facebook, and then the third one is Cadence. So all 3 of those companies will come visit, talk about their tax financials, and then on the other nights we'll be looking at different public company 10Ks. But we won't have guest speakers for all of them. There's just too much class to get through. Okay, so a little bit of background about ASC 740. ASC 740 is the FASB guidance that addresses the requirements to recognize both an expense in the financial statements, the income statement, as well as the relevant balance sheet accounts related to taxes. And at the most basic level, the objectives for ASC 740, which you can see cited here, are to recognize, to first recognize on the balance sheet the amount of taxes payable or refundable that is due. So this is probably very logical, but what you would expect is that a company, the first thing they would do is figure out how much tax do they owe, or are they owed back, and put that amount on the balance sheet as either a payable if they owe, or a receivable if they're owed. The second thing that is the second objective of ASC 740, and this is where things get significantly more difficult, is to recognize deferred tax assets and liabilities. And we'll talk a little bit more about deferred tax assets and liabilities, but this is really what puts a company's income tax accounting on an accrual basis. So to the extent that a company pays taxes today due to a timing difference, let's say depreciation, but that timing difference will reverse in the future, deferred tax assets and liabilities will be recorded to reflect the future tax consequences of that reversal. Okay? So what ASC 740 is attempting to do is it's trying to get to an accrual of tax expense which reflects all of the taxes that you'll ever pay on that year's book earnings, even if those taxes are paid in the current year or in a future year. So it's really a matching concept. But as you're thinking through the course and you think about, well, gosh, we talk a lot about the income statement aspects of a tax provision, notice that the ASC 740 objectives, as they're stated in the guidance, are really balance sheet driven. And the whole idea is that if you recognize a tax liability for the taxes you owe or should be receiving, and if you recognize the appropriate deferreds to contemplate future tax consequences of events of today, the net of those two things, if you're going to balance your journal entry, is going to be a tax expense. And so the P&L effect, which is really what everybody focuses on when you're talking about ASC 740, that P&L event will fall out from accomplishing the first two objectives, the first two balance sheet objectives. Okay, so I want you to keep that in mind. As you think about where to find the effects of income tax provisions on a company's financials, so I've helped you a little bit in terms of the first homework assignment. And what I've done here is shown the Nordstrom balance sheet, and then on the next slide I'll have the income statement. And you'll find that I'm going to ask you to pull up the Nordstrom 10K and do a little bit of reading ahead of the first night's class. But if you're brand new to provisions and you're trying to figure out, well, where would I even see the effects of tax accounting in a financial statement? So I've shown Nordstrom's here, and if you scroll through the balance sheet activity, you don't really see much. I think, in fact, you only see that line that references the word tax. So, and that has our current deferred taxes. And if you look at the rest of the balance sheet, you don't see tax payable or receivable or non-current deferred taxes. And I think it's almost a certainty that in Nordstrom's cases, that means that those amounts are buried and they're just netted with other liabilities and other assets. So to the extent that we were to peel the onion on those amounts that I shaded in green, I think you would find that there are tax balances netted within those. They're just not material enough to state separately. Okay, so that's where you're going to see the balance sheet side of income tax accounting. And then if we move to the income statement, the income statement is pretty straightforward. There will always be a line called income tax expense that will be right below pre-tax income and just above net earnings. Okay, so in the course, you'll find that in the first several classes, we're going to follow the sequence of steps in building a tax provision as shown here. And I'm not going to go through all of these 10 steps, but you'll see this slide a few times during the first several classes. And let this slide be a guide for you to keep your thoughts organized about where we are in the course. Okay? Trying to figure out an entire income tax provision can be difficult, and it can be kind of overwhelming once you start to layer on lots of facts. But as you work through tax provisions, think about the individual steps. You know, I always encourage students to break down tax provisions into small components, and the way that we'll learn provisions through this 10 steps is exactly that way. Okay, so just keep this slide handy and just know that we're going to use it as a reference. Okay, so I have a few slides on terminology. You know, I'm going to blow through these fairly quickly because we'll cover this in a lot of detail on the first couple classes. But so that you start to get somewhat familiar with the terminology that we're going to use, And I'll warn you, some of this, all of this terminology is in ASC 740, and so you can read the FASB guidance to try to understand this. But reading ASC 740 is not easy. And each night, one of the homework assignments is going to be to do some reading in the actual FASB literature. And I would plead with you to spend the time to do that and to challenge yourself to read the actual FASB guidance. While it doesn't flow nicely as a textbook and it doesn't have kind of easy, student-friendly explanations, that is the guidance. And so to the extent that you're going to be working with tax provisions in the future, it's very handy to be able to access the guidance and navigate it and understand the way that it is set up. So the first two terms that I've described here on this slide are the current provision and the deferred provision. So if you remember from a couple slides ago, I said that the two objectives of ASC 740 was first, to figure out the taxes payable receivable, and second, to compute your deferreds. These two terms, the current tax provision and deferred tax provision, are really just the opposite side of the journal entry for those two objectives. So objective number one, if you're going to determine your taxes payable and compute a journal entry just from that first objective, well, let's say you owe $100 in tax, so you're going to credit your taxes payable for $100. The other side of that journal entry, if you're going to balance that entry, is debit current tax expense. Okay. If part of your, so moving on to the second objective, so let's say that we need to determine our deferred tax provision. So let's take a different example. Let's say that a company has lost $100. So they have no taxes payable. There is nothing to do for objective number one. But they have a deferred tax asset because they have an NOL that can be carried forward and in the future save the company tax. So objective number two is to set up a deferred tax asset, and we would do that by establishing an asset on the balance sheet to reflect the tax benefit of that NOL. Well, to balance that entry, if we were going to make a journal entry just out of that second objective, we would debit deferred tax asset and credit deferred tax provision benefit. So in that situation, our provision, our tax expense, is actually a benefit. We're reflecting the fact that in the future there'll be this good thing that will allow us to save taxes, and we're going to recognize the benefit of that today. Okay. Now all that's very oversimplified, but in general, that's how we're going to think about objective one and objective two and computing balanced journal entries out of each. Your total tax provision is really the sum of those first, of the prior slide, the two components, the current expense and the deferred expense. And really what that's getting at, and I said this earlier, although I appreciate that it's hard to hear the words and understand what it's trying to say, or I'm trying to say, but the tax provision is really meant to be the total tax expense associated with the period's income. So if you think of an income statement and you think of PBT and you say, well, how much tax am I ever going to pay with respect to that PBT? And that can include this year, and it can also include future years to the extent it relates to this year's PBT. And that gets back to that matching concept. So we're trying to book a tax expense that matches with the pre-tax income for a given period. We're not going to get concerned entirely with what's shown on the tax return as a current tax due. Instead, we're trying to figure out, well, for a given year's pre-tax income, what tax will we ever pay if we look at our tax returns in the current, past, and future? Okay, because there's just a lot of differences between GAAP accounting and tax law in terms of the timing of when things hit, but that timing isn't going to dictate our tax expense. Here we define deferred tax asset and deferred tax liability. I'm just going to skip over that for now. You know, you can read the slides for yourself. We'll talk about this at great length in the class. The last slide that we'll cover here in terms of terminology has a few terms, three terms. First one is UTB liability. A UTB is an unrecognized tax benefit. And an unrecognized tax benefit is essentially a tax reserve, or maybe the way to look at it is the exposure that a company might have for taxes. So let's say that a company files its tax return, and there's some concern that if the IRS or another tax authority were coming in to audit, that a company might owe additional taxes for a given issue. Well, if that were the case and the company was aware of the exposure and they thought it was appropriate, given the GAAP financial requirements, to accrue a reserve, what they would accrue is a UTB liability. Okay? And that liability, just like Objective 1 that we discussed earlier, is a liability on the balance sheet and will have the effect of increasing tax expense, because what we're essentially saying is we're going to owe more tax. The second term here is effective tax rate. Okay? And this term is very important. We're going to use this term frequently. And the effective tax rate is really what most tax professionals and financial executives is probably the most commonly referred to term around income tax accounting. And the effective tax rate is your tax expense divided by your profit before tax. So that's the percentage of your profit before tax that is your taxes. So of course, the lower your tax rate is, the more efficient your tax structure is. So if you look at a company that has a tax rate of, say, 40%, which would be close to the combined federal and California statutory rate, that would be a high tax rate. If you look at a company that has, say, a 10% tax rate, well, then that's probably going to clue you into thinking that they're either operating in a totally different jurisdiction than the U.S., or they've got a lot of differences between the statutory U.S. provision that you'd expect and ultimately what their taxes are. And that could be attributable to lots of factors. But we'll spend significant amounts of time talking about ETRs and why an ETR for a given company will be higher or lower. And that part of this will be, you reading the company's 10Ks and getting an understanding of that. In figuring out what a company's effective tax rate is and why a tax rate is high or low, you're going to look at a rate reconciliation. And so in every public company's Form 10K, there is a rate reconciliation included in the tax footnote. And that reconciliation will take, for a company that is domiciled in the U.S., it will take a company's statutory tax rate, we'll call that stat, and it will reconcile to the effective tax rate. So let's say a company's tax rate is 10%. Okay? So the rate reconciliation will take the statutory rate of 35, and it will tell you for reasons, X, Y, and Z, why the 35 is reduced down to the 10. And that reconciliation should be very informative in helping you understand what's unique to the company to determine its effective tax rate. So both the effective tax rate and then you understanding where to find and how to understand the rate reconciliation. Those are going to be very important. Okay, so that's enough ASC 740 for now. The last slide here in the video is the homework assignment that I promised at the outset. And so for class number 1, go ahead and find the Nordstrom 10K and then answer the questions that I've shown here on the slide. And I'm going to ask, you will find, and maybe some of you have heard this from others that friends that have taken the class, there is a lot of class participation in our class. And so I need you to read the 10K, answer these questions for yourself, and then be prepared to discuss these in class, because we're going to discuss them. And I'll learn all your names, and I'll call on you, and you'll all participate, and that's just the way class operates. So that's it for now. So I look forward to seeing you on the 22nd, and if you have any questions in the meantime, like I said, just send me an email. Okay, take care.